Alright, guys, it's time to brace for impact. We are truly on a meteor heading straight for the surface of the sun. Now, I've watched the inauguration of Trump, and never have I seen so many bombshells drop in just one speech. But I want to focus on a coming currency crisis that's hovering above the world economy, and the sword of Damocles is about to drop. Now, this isn't just a disaster for global currencies. If you are an American and you transact only in dollars, well, your finances will get clobbered as well. And this crisis revolves around Trump's new energy policy. And we all heard the term drill, baby, drill. Well, Trump's just doing that. He has declared a national energy emergency. He's going to control US energy policy with the focus solely on oil and gas. Now, in addition to destroying the EV mandate, here's what Trump is going to do: encourage energy exploration and production in the United States, build out the supply chains for critical minerals including rare earths, and to ensure an abundant supply of reliable energy, which circles back to more oil and gas. Trump wants to double the energy that the US economy already has. So why is there a big rush to pump more energy? Simple. Because as we said it all along, it's the beating heart of manufacturing. It's a big reason why China is winning today and why German industries are collapsing. If the US manages to increase their supply of energy domestically, the US could start to reshore a ton of manufacturing, especially from high cost centers like the UK and Europe. And to start the economic war, Trump is betting the farm on AI.
Announcing the formation of Stargate. So put that name down in your books because I think you're going to hear a lot about it in the future. A new American company that will invest $500 billion at least in AI infrastructure in the United States and very quickly, moving very rapidly, creating over 100,000 American jobs almost immediately.
So the master plan is clear. He wants to build out a ton of data centers to fuel AI companies. And to power these structures, obviously, you need a ton of power to do so. In other words, he has just confirmed a global energy war is coming. And he plans to drop the cost of production so low that the US can compete with even China. But how realistic is this? We have heard the rhetoric from the podium. The US is already the single largest producer of oil and gas in the world, and it's by a big margin. US crude production is well over 30 million barrels a day, and this will continue to grow over the next few years, projected to hit 14 million barrels by 2026 or 2027. While Trump wants to increase production to lower energy costs down, does it really make sense today? Trying to interfere with free markets is dangerous. It's the oil companies that decide whether to drill for more oil or not. Production costs in the US are extremely high. The Permian region is the largest basin for oil production. In order to drill a new well, oil producers need prices to be $65 a barrel and above. That is the break-even price needed. Compared to the previous year, production prices are up by $4 a barrel. And in the US, this increase will continue to get progressively worse. Higher inflation alone will make this number jump up in 2025 and 2026. A US oil producer is very different from one in the Middle East. The cost of production is night and day. Saudi Arabia, for example, the Saudis, they are making a ton of money because their cost of production is in the single digits, $8 or $9 flat. And how can any US producer compete with that? Drilling in the US sounds great, but there's a reason why oil majors aren't doing it in the first place. And drilling permits isn't the only reason. It just doesn't make economic sense. Here's the problem with US oil. Since 2010, conventional oil production has been dropping down. Shale oil production, on the other hand, is flying to the moon. It's now the majority of US oil coming out of the ground. But this is oil extracted by fracking. Putting the environmental damage aside, fracking is a very expensive process that raises the cost of production. How can Trump increase domestic production at a cheap price when the oil itself is the more expensive kind? And this leads us to a very terrifying conclusion. A lot of spending is coming.
I will cut the price of energy and electricity in half. Ready? 12 months from January 20th, I take office on January 20th, your electric bill, including cars, air conditioners, heating, everything, your total electric bill will be 50% less. We're going to cut it in half. But we're going to get this done, and you're going to have, within 1 year, think of it, within 1 year, you're going to have electric bills and energy bills, and your gasoline for your car is going to be 50% cheaper than it is right now. That's a big thing. And quickly double our electricity capacity, and we're going to have it doubled and tripled. This will drive down inflation and make America and Michigan the best place on earth to build a factory.
Now, I feel like I just watched an episode of The Twilight Zone. Trump wants to reduce energy bills by 50%. But here's the dilemma. The selling price today of US crude or WTI is around plus minus $75. So oil producers are making some decent money. But to cut energy prices by half would instantly make half of all US wells unprofitable. Producers simply don't drill for new mines, for new oil fields, because whatever is coming off the ground is being sold at a significant loss. And this leads us to two terrifying conclusions. Either Trump is going to force feed Europe with expensive oil, basically force EU countries to buy US crude at a premium, or he will have to subsidize big oil companies with incredible incentives. Now, maybe that's through tax cuts or cash injections, I have no idea, but either way, this is going to come from debt. The US doesn't have any money, so the funds will be coming from the national deficit. Now, some of you might think that the tariffs will pay for energy subsidies, but it's not nearly enough. Trump's tariffs would raise a ton of money for sure. A 10% tax on China, Mexico, and Canada, 25% for them, could raise $1.5 trillion over a decade. So that's around $150 billion a year. Sounds like a lot, but it's nothing compared to the direct inflation consumers will face. A full-blown trade war would mean the world retaliating against US exports and imports as well. Canada, for example, could cancel oil supply into the US just to spite them, and that would raise prices in a hurry. You need months to a year to drill a new shale oil well at the very least, and that's the fastest. You can't dodge higher prices. Even the import tariffs themselves will be painful for US consumers. Your standard of living is about to drop substantially. And a big shout out to our sponsor today, Indigo Precious Metals. When it comes to buying gold and silver, I trust Indigo Precious Metals in Singapore. They have made investing in precious metals safe, fast, easy, and simple for both small and large scale buying. I've been stacking gold for over a decade now, and I've learned two things when buying. You want to buy authentic gold bullion, and you want to buy it at the lowest premium possible to stretch your dollars even further. And I'm glad to say I found both of this at Indigo Precious Metals. Indigo Precious Metals is a leading retailer in Singapore. They specialize in physical gold, silver, and platinum. They are my one-stop shop when it comes to buying bullion. Their prices are sharp, and they have the best brands on sale, and I can test the gold on the spot. So if you're looking to make your first gold purchase, Indigo Precious Metals is the best place to start. Whether it's 1 ounce or 1 kilo, this is the reputable dealer you are looking for. So take action today. Click on the link below and enjoy a discount on your first purchase with the code SEANFOO. Start your gold stacking journey today. Now, tariffs can be summed up easily for people like you and me. You spend more to get less. A washing machine made in China that once cost $750 is now at $820. As a result, you have less money to spend on other things, which to be honest is going to go up in price as well, especially if the whole world retaliates against the US. Now your currency is under attack, the purchasing power of the dollar is down, so it doesn't matter how high the dollar index gets, US consumers will still get clobbered. A stronger dollar does not mean that all imports into the US gets cheaper, especially during a tariff war. And here's the truth, it's something that US consumers must understand. This is the fantasy. A trade war would likely cause the dollar to soar, and in theory, a stronger dollar should lower US import prices, and that would offset the extra cost US consumers pay to the government thanks to the import tax. However, that's not always the case. For most trading partners, the US pays for all their imports using the dollar. They can always just print up paper dollars, so that's what they will use. In other words, even if the dollar strengthens, there's virtually no effect. Foreign exporters price their goods in dollars, so a stronger dollar is actually better for them. They earn more local currency units when they convert back. Unless they consciously decide to lower their margins, it's the US consumer that ultimately loses. So I hope things are much clearer now. A trade war means everyone in the world suffers from higher inflation. So if you're an American, prices are still going to go up, and it's because of the tariffs imposed by the government. Your currency is still losing value in the real world. And if you're a foreigner, prices will be going up for you as well. Your local currency will be devalued against the dollar, so imports will cost more. No one wins here. Foreign countries could be hit harder thanks to the currency effect. Now, this isn't fair, but it's how the global financial system is being set up. It's skewed towards the US, and I don't make the rules here. Now, what happened to the Canadian dollar and Mexican peso is a good example of what's to come. When Trump announced his 25% tariff on them, these currencies fell by over 1% on the news, and that's a huge drop in just a few minutes. The mechanism is simple. If the US refuses to import your goods, which is what a tariff essentially is, your companies will export less. That means dollar earnings are going to drop in addition to overall revenue. Now you have fewer dollar reserves, and demand for your country's goods from the biggest consumer has dropped, so your currency gets grinded down. If the US ramps up energy production, that would mean a lesser need to import oil from the world. Countries like Canada will get clobbered. The Canadian dollar could drop even further. Now, secondly, an energy war will push bond yields higher, or at least keep them elevated. Yields are already very high. No matter how the treasury borrows money, they will be paying 4 to 5% annually for the cash. If Trump really wants to cut energy costs by 50%, he needs to inject a ton of subsidies. Either he will help out US consumers directly, or he will give big handouts, big support to big oil companies. No matter which door he chooses, the end result is going to be the same: more bonds issued, resulting in higher for longer rates. If we look at Trump's current plan for tax cuts, it's adding a big burden to the national debt. By extending the cuts, revenue from companies to the government, they're going to drop. While this helps to boost GDP and job creation, it adds an incredible strain to deficit spending. Over the next 10 years, the shortfall will amount to over $3 trillion. So we are looking at a world of higher borrowing and higher bond yields. That isn't good for global currencies. More money could flee and hide in US assets. It's the same crisis we saw back in 2022 and 2023. We could have a deadly situation where inflation rises everywhere. And for countries outside the US, import costs could fly higher, resulting in higher local inflation. Indonesia, for example, is in panic mode. They are telling importers to repatriate all of their dollar earnings. They want to hold more greenbacks to protect their own currency. For the US, energy costs might come down, and let's assume Trump is right and he succeeds. But the money supply will still expand, and government spending will cause inflation in other sectors. It's just shuffling the money around, except big oil companies are the winners this season. We could still be in a world where asset prices continue to rise higher and higher. And unless the system suddenly breaks, everything from stocks to gold, especially gold, could continue to rise to new highs. But let me know what you think. Will Trump's energy war backfire? Or can he really do it and push prices down in the US? Stay safe, be sure to smash the like button and subscribe as we navigate through these crazy times.